What's up, everybody? It's Common Sense Investor coming at you live with another video. In this video, I'm on the phone with AB. All right, I've learned a lesson, AB. I sit here sometimes for an hour chatting with people, and I'm thinking, "Fuck, I should have had this recorded because this is some good shit." And I miss out on a lot of good content to share with everybody. So this is me and you. I'm recording it. You can get a copy of it and put it over there on your website after it's done uploading and stuff. But we're discussing preferred shares, everybody, and we're giving our takes on what's going on. But specifically, we're talking about how preferred shares work and how things got fucked up. So, all right, so we're back. I just had to do that introduction. I'm sorry.
You're fine. You're fine, Bill.
When I said double-minded, don't be double-minded. It's not that it can't be both. That it's a good thing and a bad thing.
Exactly.
Well, that's double-minded unless you can unravel that and say what that means. Well, it was a good thing. Check this out. This is how preferred shares work. I'm short on cash. Okay? Me, CSI. And I call you, AB, and I say, AB, I need to borrow $100 to make it through to the end of the month. I'll give you $10 every week until I can pay you back. And you say okay, right? You give me the money, and on Friday I'll give you $10. The next Friday I'll give you another $10. Next Friday I'll give you another $10. And then the time comes for me to pay you all of what you've loaned me back. That's interest, right?
Yep.
All right. Now, because you loaned me that $100, does that give you the right to tell me what I can do in my home?
Of course not.
Of course not. All you've done was loan me money, and we had an agreement that you loan me the money, I'll pay you interest. You don't get to tell me who can come in and out of my house. You can't tell me what time I got to turn my TV off at my house simply because you loaned me money. Now, what does that mean? The way I see that is when AMC or any other company, Apple, issues a preferred stock, they are asking to borrow money. All right, just like they would from a bank. But just like the example I gave with me and you, a preferred share owner cannot tell the company how to run its company because they're not shareholders. They have loaned the company money, and they are receiving an interest payment, which is called a dividend. Now, if you go to the bank and AMC would have borrowed $500 million, they would have had a what percent tacked to it? What's a good percentage rate on a loan?
Well, there was like on somebody with my kind of credit, it would probably be bad. I'm just kidding.
Well, I'm just saying, let's say 9%. Is that a bad? I don't know. I don't keep up with interest rate shit.
On something like that 9% might be a little bit probably on the high side.
Okay, let's say 5%.
We'll go with that.
All right. The bank is going to charge AMC 5% on a loan that they get. Or AMC can offer a preferred share, and investors normally, and from what I'm reading, normally it's institutions that buy the preferred shares. Why? Because of the dividend. Because of the, i.e., interest payment they're getting. They're going to loan. Antara bought $100 million worth of ape. Okay? Well, that gave them the money they needed, but they have to pay interest on it. You just can't say, well, give me the money and now that's it. How do I get my money back, motherfucker?
Well, the different, like the notion here is that basically Antara would be buying the preferred shares because they have that value, and perhaps as AMC in this particular example, AMC have attached that these preferred shares will have voting rights for future and could be convertible back into common stock. That's one assurance that Antara will have, like, you know what, okay, if they can't basically give me what I want from my money back, then I can sell this. But in the same time, they could practically sell itself, which they've been doing in smaller increments. selling ape to procure back their initial investment, and then at that point they're all like risk free.
I don't know. Popeye, Whimsy came to mind whenever he'd say, "If you give me a hamburger today, I will gladly pay you back to Thursday." But that's what's going on. Antar said, "You need to raise some money. How much you need?" They said, "We need $100 million," and they said, "Here you go." Now, what do I get out of this? I'm loaning you money. What is my take on this? Nothing. You get nothing in return for your investment or your loan. You loan me the shit for free. Nah, bullshit. There has to be an interest attached to a loan, and in this particular case, when you're talking preferred shares, that interest is called a dividend. And institutions buy preferred shares, which means they will loan a company money in exchange for the dividend, quarterly dividend. It's that simple. But Adam didn't attach a value to it. So Antar's really, well, they're not getting fucked because they're dumping everything. But technically, when Antar loaned them that money and there's no dividend or interest attached to it, then they're getting fucked. They just loaned me $100 million and I ain't got to pay them nothing but the $100 million back.
So I agree, and here's the other side of it. So basically, Antera is buying something that Ape technically did have somewhat of a value because it was derived for, what was it, like a third?
No.
Or a third of AMC's investment?
No, that's not right. Antar did not buy those shares. That 1/3 that you're talking about is from the original dividend that they gave us. Now, and this is where he fucks it up, people, listen. When he issued the Ape shares as a dividend to us, they were supposed to be called Series A. And the next time he did a $100 million deal, that was supposed to be Series B. Then when he sold to Antara, see how it's different loans that are people are giving him different loans. That each one of these is supposed to be a separate entity, just like 5 different people walking into a bank to get a loan. Well, each one of them are going to get a particular set rate on whatever. But in this case, he just lumped all apes into one big old pile, and that's where the confusions come in.
Okay, so as I believe that the value that they had, or Antera, as far as the what could protect their ass for the value of ape, like let's say for example they walked in and they said they want to, give AMC this $100 million, and what backs that up for them?
That's right. What backs that up? What backs up their money?
So exactly. So the answer here is the ape itself. The fact that it can be convertible into common stock at a later, date. That's one issue assurance. First of all, and second of all, the fact that they did this deal. There's nowhere that you can find that they say Antera is loaning this money.
It doesn't matter. It doesn't matter. It doesn't have to say Antara loaned AMC. They bought the preferred share, and the preferred share is a request of a loan. It don't have. It's not called a bond. Think of a bond.
Yes.
Would you call a bond the same thing? Yes, because a bond gets a fixed rate interest.
Exactly.
And institutions will buy bonds that a company sells. Why? Because they need money.
Precisely. Now, when some companies, not all companies issue preferred shares. It's the ones that do, obviously, like you said, need the money. That's their other way of basically getting money without having to go to a bank and kiss their ass for a loan.
And if you go to the bank and get a loan, what are you going to pay?
A higher interest rate.
An interest rate.
Yep.
So instead of going to the bank and paying an interest rate, you create preferred shares and boop-de-boop hedge fund says, "Fuck yeah, we'll loan you $50 million in exchange for a dividend of 30% every quarter, 10% every quarter, whatever." But I'm loaning. The preferred share is only a loan.
Right.
And they have to attach an interest to it or a dividend to it. And he didn't do it. That's where everything's fucked up.
So
Antares hung out there.
So the question is, from where will he add that dividend if they're, racking in losses at 300 plus or 200 plus million a year?
Well, then you don't get a loan. If you can't afford to pay the loan back, then you don't get the loan.
and this is why Citi's idea, like you mentioned earlier, of the preferred shares is a good idea. And my point was that if it was handled right, that's why I was saying...
If it was handled right.
Exactly. So like this whole thing where when Ape was at 10 and 9 and 8 and 7, Ape was supposed to be handled then. Because the idea of why they did this, as we've been talking now, is to raise money. The idea of issuing Ape is to have money because they needed to tackle the debt problem and they needed to tackle having the cash issue so that they won't run out of cash somewhat next year. As we know for a fact, for now, until the end of this year, AMC will have enough cash. There's nothing that will deprive AMC from having cash.
People say AMC can't give a dividend because we're in debt. You gave us a fucking Ape dividend.
Yes, that was derived from AMC itself.
Okay. But the point was, that first set of AMC shares, Apes, those are significantly other beast, completely off to itself. Why? Because they took 30% of my fucking money for that. Exactly. Antara didn't pay 30%. See how it's two different preferred shares working here?
Yes. And
my preferred share has a value, 30% of my fucking AMC. Your preferred share don't have any value because you didn't pay for it out of your AMC. So it's two different preferred stocks.
Yes, so they took, in other words, Antara took advantage of a cheap deal, and AMC wanted to, like, kind of, in my humble opinion again, and Adam Aaron and the board wanted to supply that to us or insinuate to us that was saving our bacon. My thing is,
well, it did. It did, and it still can.
Exactly, and I anticipated that Ape was supposed to be done that way. I mean, the purpose of issuing Ape was to dilute it, or in other words, sell it so that they can raise cash. That was the sole purpose of issuing Ape, without having to issue more common stock because we didn't, vote to it. Or
at the time, the purpose of creating Ape was to raise capital now and worry about dilution, i.e. conversion, at a later date. Now, here's the thing about the conversion, all right? When Ape was created, AMC was trading at, I think, around 11, and Ape started off around 8, something like that. I got a video on it. I'll have to go back and write down the numbers so I have it right. But now watch this. We received Ape. AMC's at 11. AMC has fallen to 6. So that means if we convert right now, we lose. A person does not convert their preferred shares for a loss. Now, if the stock AMC was to squeeze and it goes to 50 tomorrow, oh my God, AMC's at 50. Now what? Convert quick. I need that AMC share because it's worth 50. Why? Because my preferred share is only worth $1.60. But if I change it over to an AMC share, it's worth 50. So convert that motherfucker, and everybody's happy.
That's what we want.
That is how it works.
Yeah, but reverse stock split screws all that notion up.